Financial documents known as the Pandora Papers was published by several major news organizations. How has this been allowed to carry on for so long?
The politicians and the most powerful people in these countries are the ones who are using the system to, escape the rule of law.
The gains made since 2015 have been set back by the pandemic.
Women now hold 26% of seats in national parliaments. But at the current rate of improvement, it will take no fewer than 40 years to achieve gender parity.
As some countries start to struggle with the idea of a monarchy in the modern day,
Lesotho has had to go through the help of SADC, of course, to sit down and reshape and rethink the Lesotho they want.
I'm Peter Ndoro, and this is The Globe.
Good afternoon. Time to have a look at the markets. Asian markets at this particular point mixed as China central bank kept its lending rate unchanged. Looking at the individual bourses, the Hang Seng Index up 1.3%. Over in Japan, the Nikkei moving up, preferably marginally up 0.1%. As we look at what's happening in Europe, it's again the similar picture where it's a mixed start for European markets. They are still expecting a whole host of corporate earnings that are set to come out, the likes of Nestle, which investors are expecting from a numbers perspective. Stateside, we are still expecting a lot of the S&P 500 companies to publish their numbers. Locally, we had results out of Pick n Pay and Baldwin Properties, both those companies releasing their interim results. When we look at Pick n Pay's share price move as a result of those interim financials, up 1.1%. Baldwin Properties moving up positive territory, up 0.25%. But to get into the actual nitty-gritty of it, so to speak, we are joined by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time. How are we faring right now when you look at the JSE performance versus its global peers?
Afternoon, Nastasia. Disappointingly, Asian markets in the green, but the JSE all shares down 0.4%. It looks like our miners are having a tough day today, and that's pulling the rest of the market down with us.
All right. So Pick n Pay released their interim numbers indicating that the lockdown and the alcohol restrictions are impacting them by 1.7 billion rand in lost sales. What did you make of the figures overall?
I think the first thing to note is, as you pointed out earlier, the stock market is happy with the numbers. The share's up around 2% at the moment, and that's on a very strong share performance over the last 6 months. So it looks good at the top level. They said that they grew. Well, first of all, let's say that it's very tough to compare these numbers to last year's numbers, given all the volatility that we've seen due to COVID. Added in there's a few restructuring costs that have come through from the company. So it's been very difficult to compare numbers. Top line, though, they grew revenue by 4%. And that's pushed or aided by the fact that inflation was 3.6%. So they saw a small amount of growth. I think in terms of the disruptions from the alcohol ban and the protests, alcohol ban might have been tough on weekends, but there was definitely a case of people stocking up during the week. So I don't think it was too bad on the alcohol side of things. But overall, the July protests were very, very disruptive. They lost 2 distribution centers. Even though they say that they'll get most of the money back from insurance, the increased costs of logistics of trying to transport extra stuff around the country to make up for those 2 lost distribution centers, you don't get that money back from insurance, so that's a bit tough. But overall, the group seems to be making good progress, and they continue to restructure and be a leaner, meaner machine going forward.
All right, so let's move things to the Asian side of the world and look at the rally we've seen in Chinese tech stocks, in particular Alibaba. I mean, to what can we attribute that move?
Yeah, so let's go back a few months. Chinese tech stocks were under a lot of pressure because it was seen that the Chinese authorities were putting a lot of pressure on these companies, increased oversight, questioning some of their business models. And the worry was that Beijing was going to make these businesses less profitable. The recent rally in Alibaba is because Beijing allowed Jack Ma, Alibaba's founder, to travel to Spain. And that was after being effectively on lockdown in China for over a year. And that the market took that as a signal that Beijing is being less hard on tech companies. And as a result, Alibaba and its sister company or peer, Tencent, have done really well over the last few days. And that's good news for Naspers and Prosus, who's a big shareholder in Tencent.
So we're still, in U.S. earnings seasons, having had the banks kick us off last week. What are some of the companies that you'll be keeping an eye on? We had, the banks last week. Everyone's talking about Netflix numbers. One, what did you make of Netflix's figures, and what are you expecting from other companies on the S&P?
Yes, so it's in terms of the bank numbers that we saw, it reinforced the fact that the global economy is coming out of the COVID slump very well, and that's good news for consumers and stock markets. Netflix's numbers last night were a beat. They showed good subscriber growth, and part of that is due to Squid Games, and that's was mostly to be expected. And then tonight we have numbers from Tesla. That's normally a very volatile stock when their numbers come out because there's very, very high expectations around the numbers. And if they miss on any of their metrics, normally the share gets hit very hard. So let's see what happens there. But, Elon Musk, who I suppose we can call South African at some level, worth $250 billion or $250 billion. That's not bad. He's almost worth the equivalent to South Africa's GDP. So let's keep cheering him on.
Right. Before I let you go, there was a Barron's article talking about what is happening in China. The author indicating that it might actually hurt some of the U.S. companies that have exposure to China, and as a result, filter into the S&P 500. However, apart from that article, what do you make of the S&P 500's performance year to date?
Well, it's up 22%, and I don't think that's pretty good going for 10 months worth of trading. Let's see if we get a Santa Claus rally, so to speak, into the end of the year. So far, earnings look very strong. And if we see a continuation over the next 2 or 3 weeks as the rest of the major constituents of the S&P 500 report, we should see a good close to the year. And if we're up 25, 30%, that's a great year in anyone's books. China's only a small part of that. The bulk of the S&P 500 are your tech stocks, and they're global players. And in most cases, they don't have access to China because they won't play by Beijing's rules, or Beijing's locked them out because there's local Chinese competitors already. So China's only a very, very small part of the S&P's performance.
All right, then, Michael, thank you so much for your time. That is Michael Traherne from Vestec Asset Management. And he did say that later today we are expecting third quarter earnings from the likes of Tesla. Tomorrow we're expecting earnings from Intel. So, of course, we'll be keeping abreast of all of those company financials. That is it from me. We're going to take an ad break. And when we come back, we'll have